Hello, good morning everyone. My name is Somesh Pathak, Assistant Professor, Department of Management Studies, Uttarakhand Open University. Talking about today's lecture, we are studying the course title of the course is Fundamentals of Financial Inclusion and Cyber Safety. So this is the third lecture. In the first two lecture, you might have read about what is financial inclusion, and the second one you might have read about what is digital payments and investment measures. Now, in the third lecture, you are going to understand what is saving and insurance related products. Now, when we talk about saving, what do you understand by the term saving? So, saving is any income that is put aside for future expenses rather than being used for present expenditures, that is referred to as savings. It enables individuals to maintain a healthy lifestyle, accomplish their financial goals, and manage financial risks. Now, the amount that one is left with over after subtracting all of your own personal expenses and costs during a particular period of time, this is to be noted, during a particular period of time is known as savings. Therefore, savings are the net amount of money you are left with over after all of your financial obligations have been paid. What are the benefits? We can, so to say, what are the benefits of savings? So, this enables individuals to establish and attain both immediate and long term objectives, that is, retirement planning, planning for the education of their children, or purchasing any kind of property, etc. It allows individuals to form a stable financial journey till the time they are able to survive in this universe. It helps in comprehending or understanding your income, expenses, savings, and investments, if any. It encourages more sensible spending and smarter budgeting because if you know how much to save from what you get, you are smart enough to know where to spend and how to spend. It promotes economical saving practices. It aids in selecting the appropriate investment measures according to your interests and risk taking capacity. Now, saving establishes a contingency or emergency fund to address unanticipated occurrences such as illness or any minor major accident, or if in case there is a job loss. It reduces the need for loans in times of emergency. It also lowers the effect of unanticipated financial losses. Talking about the savings measures, first we have savings account. So it's a bank account that is meant for keeping one's money in a bank, that is referred to as savings account. Although savings account usually offer a low interest return, they are considered as secure places to keep money that you want on available for unforeseen expenses. Now, what are the prospects of a saving account? First thing, it helps in our safety and security. It helps us earn interest, although the interest is low as compared to other avenues that are available. It helps us to easily access our funds. It helps builds our saving habit. No investment risk, since you are saving, you're not investing anywhere, so the risk is always low, and it helps in financial planning. So basically, it's useful for financial planning. The other term is fixed deposit. Banks, along with other financial institutions, offer fixed deposit accounts, which are financial instruments that allow customers to deposit a set amount of funds for a specific amount of time at a predetermined interest rate. So, all the terms and conditions are uh, priorly or before agreed with the customer and the client, and then the customer fixed a particular amount of fund on the fixed deposit that the bank or the other institution has to offer. What are the prospects of a fixed deposit account? First of all, the returns are guaranteed. Safety and low risk, as we saw it in savings account. It offers higher interest than the saving account, right? It's because the amount that you are keeping here is fixed for a particular time. That's why the institutions or the banks offer higher interest than the saving account. It You can keep it for a flexible tenure. It depends on an individual if how much for how long a person has to keep it for 10 years, 15 years, 20 years, depending on the consumers or customers' interests, and can be used as a collateral. Collateral means on the basis of that fixed amount or fixed account, you can ask the bank for a loan. So that can be mortgaged or that can be taken as a collateral in case one needs a loan for a particular thing. It's easy to open and access, and it helps in disciplined savings for future expenses. A recurring deposit. Banks and in India, post offices also offer a savings option that is termed as a recurring deposit, as the name suggests, whereby you deposit a certain amount monthly on a regular intervals for a specific period of time and you earn interest on it, right? So this is a regular payment or regular interval kind of saving device where you can give money to the insurer or to the bank that the a particular amount can be saved by you in monthly terms or 6 monthly, biannually. That depends on terms and conditions that the deposit account offers. Now, the prospects of recurring deposit, it offers attractive returns on small investments. It ensures guaranteed returns, provides loan facility, and assists in high liquidity. Liquidity, that means you have cash in hand. Promotes regular saving habits and helps in ease of regular payments. Public Provident Fund. The other one is Public Provident Fund. So what happened in 1968 was the National Savings Institute of the Ministry of Finance. It launched a public provident fund. So it was a voluntary saving tax reduction social security tool that was operated in India. It's still in operation. So by providing an investment with acceptable returns in addition to income tax benefits, the scheme's main objective is to attract minimal deposits for retirement benefits during uncertain times. Okay, what are the prospects of PPF? It offers safe and it is government supported. The government supports it because the institution offers that PPF is backed or supported or aided by the government itself. It is tax free and competitive interest is given as compared to other policy givers that are available on the market. Long-term wealth creation. It helps in maintaining long-term wealth creation. It also provides loan and withdrawal facility. Tenure can be extended as per the customer needs and wants at minimum investment and less risk. How does it help in beneficial or for tax kind of thing? So the interest that is earned on the PPF maturity amount, that is free from tax, and money received at maturity is tax free. The money received at maturity and the interest earned from PPF both are tax free. The other one is National Savings Certificate. So the Indian government offers a fixed income investment plan called a National Savings Certificate, which is distributed by India Post. It provides investors with a safe and certain return and is designed to encourage saving. National Savings Certificate are a popular option for modest to mid-income investors since they can be bought at post offices while offering tax and advantages. So what is the advantage of a National Savings Certificate? Like suppose one is living in a remote area and the access to banks is very tough. But since the number of post offices in India are enormous, are numerous, and almost every village of India has post office station. So a person who has no access to bank can go to the post office and open his National Savings Certificate account. What are the prospects of NSC, National Savings Certificate? These are also government backed. It follows a fixed interest rate. It helps in tax benefits. Interested, the interest that is given in this account or amount is compounded annually. Okay, compounded interest basically, and so the interest that you get in interest, you also get interest in the interest that you're getting already. It provides easy accessibility and transferability of policies. Suppose you change your village or you change your area of living, no matter where you are, if there is a post office available or the bank branch available, you can get your policy transferred from one branch to the other. Okay, thank you.